Hello and welcome dear traders and investors. I'm glad to present you the daily market review prepared by analyst and expert from fx.co portal. Here we go. Today is April 28 and we're starting from euro-dollar pair with Jakub Novak. But first, let's have a look at 5-minute chart for analyzing yesterday's transactions. The test of 1044 happened when the MACD line was far from zero, so the downward potential was limited. But two consecutive tests of 1.1044 with MACD line below zero gave us a signal to sell that gave around 30 pips price movement in the market. Although consumer confidence data from the euro area matched that forecast, euro-dollar saw a decline as a risk appetite fell amid disappointing Q1 GDP data from the US. Upcoming reports today could affect euro as good numbers are likely to strengthening buying pressure. Aside from the GBP reports for Germany and the Eurozone, unemployment levels and inflation figures will influence market direction. There will also be PCE index from the US as well as data on income and expenses, which could return demand for dollar. Chicago PMI data and consumer sentiment from the University of Michigan will be of much lesser importance. Long positions buy euro when the level of 1.1035 is reached, and then take profit at the price of 1.1086. Growth will be seen if there is very good GDP data from the Eurozone. However, before buying, make sure that the MACD line is above zero or is starting to rise from it. Euro can also be bought after two consecutive prices tests of 1.1006. But the MACD line should be in the oversold area this time, as only by that will the market reverse to 1.1035 and 1.1086. For short positions, sell euro when the level of 1.1006 is reached, and then take profit at the price of 1.0970. Pressure on euro-dollar pair may return if the upcoming Eurozone GDP data disappoint traders. However, make sure that before selling the MACD line is below zero or is starting to move down from it. Euro can also be sold after two consecutive prices tests of 1.1035. But the MACD line should be in the overbought area this time, as only by that will the market reverse to 1.1006 and 1.0970. Working from resistance and support levels, Dean Leo is helping us with pound sterling dollar pair. Currently, in the GBP USD chart is displaying a bullish momentum, indicating potential for a continuation towards the first resistance at 1.2546. If the prices manage to break through these levels, it could potentially rise further towards the second resistance level at 1.2598, which is significant swing high resistance. In the event of reversal, the price could find support at the first support level of 1.2383, which has previously acted as a strong level of support. A break below this support level could lead to the next level of support to 1.2339, which is also an important overlap support. Moreover, there is an intermediate resistance at 1.2503 between the current price and the first resistance. A break of this intermediate resistance could lead to strong bullish acceleration towards the first resistance level. Gold, sweet gold. Trading plan for this commodity asset is presented by Dimitrios Topaz. Let's have a look. Early in the European session, gold is trading around 1988, below the 21 SMA and below the 200 EMA. On the chart, we can see a consolidation of gold between a high of 2009 and a low of 1974, which has been oscillating for the past few days. Yesterday, the price of gold fell sharply after the release of US GDP data for the first quarter. Gold reached a level of 2003 and then lost almost 30 USD, falling to the 1974 area. In the chart, we can see the formation of a falling wedge. A break below 1986 could accelerate the fall of the precious metal towards 1974. This area of 1972-74 has been strong support and has acted as a bottom for gold on previous occasions. If gold falls below this level, it could reach 7-8 Murray level located at 1968. Conversely, in case of a sharp break above 1994, this could be seen as a positive sign for gold, and the instrument could reach the psychological level of $2,000 and also reach the strong resistance of 2009. The Eagle indicator is given a negative signal. It is likely that a fall below 1986, where the daily pivot point is located, might cause a further depreciation of gold, and the price could fall in the coming days. And finally, here's Laurie Bailey with AUD-USD pair forecast. Amid yesterday's moderate increase in risk appetite, coordinated by the strengthening of commodity currencies, oil rose by 0.63%. The Australian dollar rose by 31 points. The price has returned to the range of 0.6628 and 0.6730. Perhaps speculators have a plan to buy back the Aussie after today's European GDP report. The plan, if it exists, is quite daring, as the Federal Reserve and the European Central Bank meetings will take place on Wednesday and Thursday. Now we're seeing speculative actions, as yesterday's trading volumes were the highest in the last 2 weeks. So, with breaking through the target level of 0.6670, the price may jump to 0.6730, while consolidating below 0.6628 will open a quick target of 0.6567. Below that is target level of 0.6450. The Marlin oscillator is still in the negative territory. On the 4-hour chart, the price is settled above the level of 0.6628, but shows the intention of returning below. The Marlin oscillator is also thinking of returning to the negative area. That's all for today. See you online soon. Good luck.